What's going on, guys, and welcome back to another video. In today's video, we're going to look into the 5 holdings that I've added to my stock dividend portfolio and the reasons behind this. We will look into the financials of each of the 5 companies. We will discuss the dividend payout and frequency. We will also look at what each company does and their main shareholders. And at the end of this video, we will take a brief look at how these companies affect my diversification overall. If you find this video helpful, or if you want to follow my journey to financial freedom, it would be great if you could subscribe to this channel and comment below on your views on stock portfolio diversification and dividend payouts. I would also be very interested to know if you think there is another stock market crash on the horizon or if we are at the beginning of another bull market. So with that being said, let's dive right into today's video. The 5 holdings that I have added to my portfolio are as follows: Exxon Mobil, McDonald's, Realty Income, Walmart, and I've added further to my Wells Fargo position. So let's start off with Exxon Mobil. Exxon Mobil is an American multinational oil and gas corporation headquartered in Texas. Their CEO is Darren Woods and they have over 71,000 employees. As you can see from the 1-year chart, Exxon Mobil is in the red. Even since gathering the information for this video, the stock has dropped a further 3%, which is now nearly half of what it was in June 24, 2019. Due to this company being a heavyweight in the oil industry and also because I'm a long-term investor, this screams undervalued stock. ExxonMobil trades on the New York Stock Exchange and has ticker XOM. Pre-market on the 24th of June, it was currently priced at $46.70. However, as I previously said, the share price has dropped by a further 4% since taking this screenshot. As it takes 2 days for my money to go into my Degiro investment account, I still have yet to buy these shares. Again, as I am a long-term investor, this is actually good news for me as I'm getting the shares at an even cheaper value. The company's top 3 shareholders are Vanguard with a 7.97% holding, SSGA Fund Management with a 4.88% holding, and BlackRock Fund Advisors with a 2.45% holding. In terms of dividend payouts, the company is currently paying $3.43 per share, which equates to a very tempting 7.46%. This dividend is paid out on a quarterly basis. Here is also a quick view of the company's balance sheets for year-end 2018 and 2019. Even though the company's earned income has decreased, I feel that because the share price is nearly at half the price it was, I feel this is still a great buy. The second holding that I've been buying into is McDonald's. As I'm sure you're already aware, McDonald's is an American fast food company founded in 1940. McDonald's CEO is Chris Kempczinski and they have a revenue of $21.08 billion in 2019. Like many companies on the stock market, McDonald's is also trading below its highs of June last year. Obviously, due to the store closures due to the current pandemic, it is no surprise that the stock price has suffered. McDonald's is traded on the New York Stock Exchange and has ticker MCD. McDonald's share price is currently at $186.62. As it stands, McDonald's top 3 shareholders are Vanguard Group with 8.85% holdings, Capital Research and Management with 5.89% holding, and third, SSGA Fund Management with 5.25% holding. The company currently pays $4.73 per share in dividend payout, which equates to 2.54%. The company has consecutively increased its dividend payout for the last 12 years, and this dividend is paid out on a quarterly basis. As you can see from their balance sheets, their total revenue and gross profit is slightly down from last year, which is no surprise again due to the closure of their stores. But one of the main benefits as a long-term investor is that we know these stores are going to open again and that the share price will increase over time. Like Coca-Cola, I feel that McDonald's is one of those kind of companies that no matter what happens, its share price will always increase over the long term and the company will never close. The third company that I'll be adding to my portfolio is Realty Income Corporation. Realty Income is the first real estate company added to my portfolio, which will certainly help with diversification. Realty Income is a real estate investment trust that invests in freestanding, single-tenant commercial properties in the US, Puerto Rico, and the UK. The company is headquartered in San Diego, California, and it has a revenue of $1.49 billion in 2019. As you can see from the company's one-year chart, it took a hit at the start of March, like most other companies, due to the pandemic. But since shops and businesses have started to reopen, you can see the share price slowly increase again. Again, as this company operates out of the US, Puerto Rico, and the UK, it also helps with global diversification. Furthermore, Realty Income is traded on the New York Stock Exchange and has ticker O. Its current share price stands at $61.27. Realty Income's top three shareholders are Vanguard with 15.2% holding, SSGA Fund Management with 6.58% holding, and BlackRock Fund Advisors with a 3.13% holding. In terms of dividend payouts, Realty Income pays $2.71 currently per share, which equates to 4.41%. Another interesting thing about this company is that it pays a monthly dividend. As I'm sure you're already aware, this doesn't mean that the company's dividends are better than anyone else's because it's paid out monthly. It just means that the $2.71 payout gets divided 12 times out and paid out monthly instead of, let's say, quarterly. Realty Income is also a dividend aristocrat and has consecutively increased its dividends for over 25 years. You can see from the company's balance sheets that over the past 3 years, their total revenue has increased on year. The fourth company that I've added to my portfolio is Walmart. Walmart is an American multinational retail corporation that operates a chain of hypermarkets, discount department stores, and grocery stores. Its current CEO is Doug McMillon and it's owned by the Walton family. The company's current revenue is 524 billion USD. Surprisingly enough, the company wasn't affected as much as they thought by the pandemic. The company's share price is slowly going up in an upward trajectory. Walmart is traded on the New York Stock Exchange and has ticker WMT. Its current share price is $121.07. Walmart's top three shareholders are Walton Enterprises with a 35.3% holding, the Walton family with a 14.8% holding, and thirdly, Vanguard Group with a 4.62% holding. The company is currently paying $2.11 per share in dividends, which equates to 1.76%. This dividend is paid out on a quarterly basis. Obviously, another positive outcome for this company is that its earned income on the balance sheet is increasing year on year. The fifth company on this list is Wells Fargo. If you've seen some of my previous videos, you would have known that Wells Fargo is already in my stock portfolio. But due to the company's share price continually falling, I feel this is a great buy for the long term. Obviously, banks get hit hard when a recession comes about, as individuals and businesses aren't taking out as much loans and they're unable to repay their mortgages. But when the economies go back to normal, banks also go back to normal and their share price will go upwards yet again. So Wells Fargo is an American multinational financial services company headquartered in California. In terms of size, it is the world's fourth largest bank by market capitalization and the fourth largest bank in the US by total assets. You can see from the one-year chart that Wells Fargo's share price has nearly cut in half. As a long-term investor, when you see companies such as Wells Fargo share price cut in nearly half, it is no surprise that because companies such as Wells Fargo over time have proven that they come back from recessions and cyclical movements, that I'll be grabbing as much stock of Wells Fargo at the current price as I can. Wells Fargo is traded on the New York Stock Exchange and has ticker WFC. It is currently trading at $27.23 per share. The company's top three shareholders are Berkshire Hathaway with a 7.88% holding, the Vanguard Group with a 7.28% holding, and SSGA Fund Management with a 3.99% holding. As a financial sector stock, Wells Fargo pays a pretty impressive dividend payout. The company currently pays $1.92 per share, which equates to just under 7% in dividends. The company has consecutively increased its dividend payout for the past 9 years, and it is paid on a quarterly basis. One of the main reasons why I added these 5 holdings to my portfolio is to help improve my portfolio's diversification. I now have 3.22% of my portfolio in the communication sector, equating to $121. 8.07% is in the consumer discretionary sector, equating to $303. Consumer staples makes up the majority of my portfolio at 26.16%, equating to $980. Exxon Mobil, which was my first energy stock, equates for 1.24% of my portfolio, or $46.70. The financial sector is my second biggest holding with 18.64%, or $700. In the healthcare sector, it makes up 11.41% of my portfolio, or $428. I currently am not invested in the materials sector. Realty Income was my first real estate company, and this equates to 1.63% of my portfolio, or $61.27. The technology sector makes up my third biggest holding at 12.93%, which equates to $485. And finally, in the utility sector, this makes up 8.29% of my overall portfolio, or $311. Overall, my portfolio now is valued at $3,766. I always find being able to see information on a visual graph a lot more helpful than just reading numbers. So I would definitely recommend creating pie charts, bar charts, etc. for your own portfolio to give you a better visual representation of where you stand. So with that being said, that brings the end to today's video. I'd be very grateful if you could like, comment below on your views, and also subscribe to this channel for more related videos. Thanks again, and I will see you guys in the next video.